Subscribe to my channel Report Stock.
Ever thought about what happens when a company focused on, health sciences and wellness decides to mix things up with a really bold financial strategy?
It's not your typical combination, that's for sure.
Exactly. So today, we're doing a deep dive into Prenetics. They just released their Q2 2025 financials. And our mission, really, is to unpack this story. It's got explosive growth on one side, consumer health, and then this surprising move into digital assets, optimizing both health and wealth.
Right. It's quite the intersection. Prenetics is really showing that innovation isn't just about the lab or the product. It's about their whole corporate strategy kind of pushing boundaries.
Okay, so let's break down this health and wealth idea. Starting with health, their core business. IM8 Health seems to be the big story there. The growth sounds, well, phenomenal.
Oh, it really is. If you're watching the wellness space, IM8 is one to track. They only launched last December, right?
Yeah, less than a year ago.
And they're already on a path to hit an unprecedented $100 million in annual recurring revenue within the first year.
$100 million ARR in year one.
Wow. It's massive. Just look at August. They pulled in $5.9 million in monthly revenue, and they're aiming for $9 million a month by the end of 2025.
Okay, so the momentum is clearly there.
Absolutely. We're talking a compound annual growth rate, or CAGR, of over 3,100%. That's hyper growth territory.
A 3,100% CAGR, that number alone tells a story. It's not just growth, it's like market disruption speed.
Yeah.
How do they manage that? Especially getting the word out.
It seems like a smart mix. Good product, obviously, but also really clever market penetration. They've got high-profile partners. David Beckham was a co-founder.
Right, the Beckham connection helps.
Definitely. And then there's the multi-year deal with Aryna Sabalenka, world #1 tennis player, U.S. Open champ, and she's actually a shareholder, too.
Ah, so she's invested in the success.
Exactly. And remember that AI video with her? It went viral.
Oh, yeah, the Instagram one.
That's the one. 233 million views. Plus, they had that Times Square billboard campaign. It's translating to over 8 million servings delivered, more than 300,000 customer orders. It's not just buzz.
Okay, impressive reach. But reach without sustainable economics can just be expensive. How do the numbers look underneath? The unit economics.
That's the crucial part, and they look really solid. For anyone in subscriptions, these are great metrics. Over 80% of new customers sign up for subscriptions. The average order is about $110, and a gross margin of 52%. Pretty healthy.
And the customer acquisition cost versus lifetime value, that LTV-CAC ratio.
Yeah, that's the key metric for sustainable growth. Their implied LTV-CAC is 4.8x.
4.8. So for every dollar they spend getting a customer.
They expect to get nearly $5 back over that customer's lifetime. That signals real profitable growth, not just, flash in the pan hype.
Okay, so IM8 is clearly firing on all cylinders on the health side. But we started by mentioning this bold financial strategy, the wealth part. This is where things get maybe a bit unconventional for a health sciences company.
Right, very unconventional. They've initiated a disciplined Bitcoin treasury program. It takes some real conviction for a public company to do that.
Bitcoin. Why Bitcoin? What's their thinking?
Their rationale, as they state it, is they see Bitcoin as a superior store of value. Also, a non-correlated asset, meaning its price doesn't necessarily move with traditional stocks or bonds. And it's a hedge against inflation. They're essentially looking to capture what they call asymmetric upside.
Asymmetric upside, meaning?
Meaning the potential for gains is, in their view, much larger than the potential downside risk. It's a bold stance.
And they've backed this with actual money, not just talk. Can you walk us through the specifics? How much? When?
Sure. They started in Q2 this year. Initial purchase was $20 million. That got them 187.42 Bitcoin back in June at an average price around $106,712 per coin.
Okay, a significant initial buy.
And it didn't stop there. Since August 1st, they've been adding 1 Bitcoin every single day, programmatically, using operating cash.
1 BTC a day, so they're continuously adding.
Correct. As of early September, they held about 228 Bitcoin. The overall average cost is around $108,131 per BTC.
And has it paid off so far? Any indication?
Well, based on recent prices, they're showing an unrealized gain of about $1.6 million already. That works out to an annualized yield of roughly 30% since they started. So, early days, but their hypothesis seems to be playing out. They even have a public transparency page for it.
Interesting. So putting these two pieces together, the booming health business and this novel Bitcoin treasury, what's the overall picture? How's Prenetics doing financially? Big picture.
The overall health looks robust. First half revenue was up massively, 452%, hitting $32.3 million. Q2 itself was even stronger. Revenue surged nearly 600% year over year to $17.7 million.
That Q2 number really pops.
It does. And based on this, they've raised their full-year guidance for 2025. They're now expecting between $85 million and $100 million in revenue.
And profitability, that's always the question with high-growth companies.
They have a clear path mapped out. They expect to hit break-even in the first quarter of 2026. And then be EBITDA positive after that. So generating profit from operations, that's a key milestone.
Right, and their balance sheet.
Strong. About $90 million in cash and Bitcoin combined. Plus, they're expecting another $46 million or so in Q4 from selling off their ACT genomics unit, so plenty of resources.
It really is a fascinating combination. You've got this success in health and wellness with IM8 clearly resonating, and then this pioneering, you could say, financial strategy using Bitcoin. It's quite a unique health and wealth approach.
It absolutely is.
Yeah.
And it makes you wonder, doesn't it? What could this signal for other companies? Maybe outside of tech or health sciences, could we see traditional corporate treasury management start to evolve? Might other businesses look at different kinds of non-traditional assets to build long-term value?
That's a really interesting thought to leave our listeners with. How might this blend of operational success and unconventional finance reshape corporate strategy more broadly? Something to keep an eye on.
Subscribe to my channel Report Stock.